If you're a small business owner, freelancer, or self employed professional, you know how fast the years fly by. 1 minute it's summer, and the next thing you know, it's time to wrap up the year and your books. Now, if you've heard the phrase year end accounting makes you want to run for the hills, don't worry. Today, we're breaking it down into simple, practical steps you can take, even if you're not an accountant. Welcome back to the channel. If you're new here, I'm Joe, a licensed, certified public accountant with over 10 years' experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes, and I'm all about helping you take control of your money and live smarter. Be sure to like and subscribe to the YouTube channel for more videos, and check out our blog site where we post every Monday, Wednesday, and Friday. By the end of this video, you'll know exactly what to do before December 31st to get your finances organized, save time during tax season, and set yourself up for a smoother, smarter year. Let's start with something simple but powerful: reconciling your accounts. That just means making sure your records, whether it's QuickBooks, Wave, or even a spreadsheet, match what is in your bank and credit card statements. Be sure to go through your bank accounts, business credit cards, your PayPal, Stripe, or other payment processors. If something doesn't match, track it down. Maybe a deposit got missed or a transaction got double counted. Doing this before the year ends saves you hours, and it helps your accountants file faster and more accurately. Think of it like checking your GPS before a long trip. You don't want to start next year's journey with bad directions. Next up, make sure you sent all your invoices and followed up on the ones that haven't been paid yet. Be sure to go through your invoicing system or spreadsheet and look for anything marked unpaid or pending. Send a gentle reminder. A simple, "Hey, just checking to see if you got this invoice before we close out the year," works wonders. Getting those payments in before December 31st helps your cash flow and gives you a more accurate picture of your real income for the year. And let's be honest, no one likes chasing payments in January. Now, this step is where things often get messy, but it's crucial. Go through your expenses and make sure every transaction is properly categorized. Why are we doing this? Because your expenses categories determines your tax deductions, and they may help you understand where your money actually went. A few categories business owners often miss are subscription and softwares like Canva, Zoom, or project tools, marketing and advertising costs, professional fees like legal, design, or consulting help, business meals and travels, and the home office expense. If you're unsure where something belongs, make a note to ask your accountant, but don't leave anything uncategorized. That's like leaving money on the table. Categorizing your expenses helps you to maximize deductions and understand your business spending patterns. Here's one most people want to skip: setting aside money for taxes. If your business made a profit this year, congrats, but that also means taxes are coming. A simple rule of thumb is to set aside about 25 to 30% of your net income. That's your revenues minus expenses for federal and state taxes. If you've been making quarterly estimated payments, you're already ahead of the game. If not, start setting that money aside now so tax season doesn't catch you off guard. Here's a good tip: open a separate savings account just for taxes. That way, you don't accidentally spend what you may owe in taxes at the end of the year. Year end isn't just about compliance, it's a perfect time to learn from your numbers. Run a simple profit and loss statement or summary of your income and expenses. Then you're going to ask yourself a few questions. What services or products brought in the most money? Which expenses grew this year and why? Did your profit go up or down compared to last year? You don't have to analyze like an accountant, just notice the trends. These insights help you make smarter decisions for next year. like where to invest more and where to cut back. If your cash flow allows, you can make strategic purchases before December 31st. That also reduces your taxable income. Some of the common year end deductions include if you upgrade business equipment such as laptops, tools, or cameras, stocking up on office supplies, paying for next year's software subscription in advance, contributing to a retirement plan like a SEP, an IRA, or a solo 401k. But here's the golden rule: only buy what your business truly needs. A deduction is nice, but spending $1 to save 30 cents in taxes isn't a great trade if you don't actually need the thing. If you need something, now is the time, but don't overspend just for deductions. Focus on investments that strengthen your business. This step is quick but essential. Be sure to back up your financial data. Before the year ends, be sure to save a digital copies of key receipts and invoices. Back up your accounting files to the cloud or an external drive. Create a folder for this year's financials. It takes 10 minutes, but it can save you from disaster if your computer crashes or files get lost. And trust me, when tax time comes, you'll be grateful for an organized folder instead of a pile of receipts. If you work with an accountant or a bookkeeper, reach out before January. When you set your meeting up with your accountant or bookkeeper, be sure to ask them if there's any last minute tax savings moves before the year end, what they'll need from you for their tax preparation, and if there's any changes you should make next year. Even a short check in can uncover deductions or credits you might miss on your own, and it helps your accountant plan ahead instead of scrambling later. Finally, take what you've learned this year and plan for a few improvements for the next year. Maybe that means switching to a new accounting software, hiring a bookkeeper, or scheduling a monthly money check in instead of waiting until December. Small systems built now lead to big peace of mind later. Don't overhaul everything. Just make one or two small improvements. Consistency builds control and confidence. So, there you have it. 9 simple, practical year end accounting tips that don't require an accounting degree. You don't have to master debits and credits. You just need to stay organized, pay attention to your numbers, and take a little time before the year ends to get things in order. When you start the new year with clean books and clear insight, you're not just ready for tax season, you're ready for growth. Thanks for watching. And if you found this helpful, hit that like button. Subscribe for more small business accounting tips.